Thanks for joining us at xm.com for this Forex Preview video. We'll be exploring Canadian jobs data, which are out on Friday, and of course, how the loonie will move. I'm Cristina Marujos, and joining me today is investment analyst Cristina Partenido. Cristina, it looks like Canada might be in for some good news, at least according to forecasts, which predict that the jobs data in August could be encouraging, fueling therefore hopes that the country is on its way to economic recovery in Q3. Do you think the jobs numbers will be as positive as expected?
Hi, Christina. Indeed, markets are expecting a stronger Canada in the third quarter following the sharp contraction in the second quarter, which was one of the ugliest in Canada's history and worse than the downfall in the US and some EU countries. But the virus condition hasn't really deteriorated over the past 3 months as in other key economies. Actually, although we saw some spikes, the infection numbers don't look like a second wave in the carve yet, so their reopening plans haven't been really interrupted or paused like in other economies, although some restrictions remain in place. And that may have allowed more people to return to work, pushing the unemployment rate lower from 10.9% to 10.1% as markets forecast. Moreover, compared to July, employment is expected to increase at a softer rate, almost around half of what we have previously seen. But this is not necessarily a negative sign because after the massive increases between May and June, less people remain to be rehired. And if we look at pre-pandemic stats, employment is still well above pre-pandemic levels, so the readings are still showing that we are heading towards normal levels, and I think that a higher or a lower than expected employment figure wouldn't be bad news for Canada and could still support the case of a stronger GDP in the third quarter.
However, markets do have some reasons to remain cautious for now, mainly due to Canada's close correlation to the US, which for the time being is still not out of the woods regarding the virus situation and the economic recovery. Could the US drag Canada's recovery down?
Well, I wouldn't be very surprised if economic conditions follow the ones in the US. The countries are close neighbors and COVID could easily spill over to Canada unless the borders are fully shut down, which is hard to happen because some Canadian citizens work in the US and the other way around. Moreover, in terms of trade, there's a tight relation between the countries. 75% of Canadian exports are moving to the US each year, and any potential economic deterioration in the US in the future could reduce demand for Canadian products and weigh on growth. Maybe not in the third quarter, but probably in the next ones. The US trade conflicts with other big economies such as China could also affect commodity prices, which Canada is highly exposed to. So I think Canada and the US could be an example of a domino effect phenomenon, and there's no doubt that policymakers are aware of that. In terms of policy, both the Fed and the Bank of Canada have pushed interest rates to record lows and have no intention to apply negative rates. The QE program have also been extensively used, so both banks should turn more creative in the coming months if the virus conditions deteriorate. Perhaps the Fed is facing a stronger pressure because of the political uncertainty, which delays the creation of a second fiscal package and the November election. Trudeau is also facing some political pressure because of a charity scandal, which forced him to prorogue the parliament and call for a confidence vote in the government. But according to the polls, his leadership is still safe, so the Bank of Canada may not rush to take drastic measures or signal the change of its inflation targeting like the Fed did previously. So next week's policy meeting may not see any change in Bank of Canada, but the Bank of Canada's chief may let Trudeau to take action first when he announces the new budget of September 23rd.
And finally, let's have a look at the loonie. How do you think it will move on Friday's jobs report, given the fact that the US is also reporting its employment data on the same day?
Well, I think Friday's session could be a matter of which report will surprise the most because markets start to price in that Canada could grow faster in the third quarter than the US. But ISM PMI readings out of the US showed the stronger business sector in August, and the employment sub-index also improved. So probably the reports may cancel each other, leaving dollar loonie steady in the end because we also expect an encouraging NFP report out of the US. However, if the NFP disappoints and the Canadian employment data come in better than expected, then the loonie could reach new highs, also taking advantage of the less riskier political environment in Canada.
Cristina, thank you so much for joining me today, and thank you for watching this Forex Preview on the Canadian Jobs Report out on Friday here at xm.com.